Hello, and welcome back to the channel. Today we'll be discussing something known as infinite banking. We'll provide you all the necessary information you need on this topic so that you can make a knowledgeable decision. But before we begin, please consider subscribing and pushing that notification bell so you never miss a new update. Done? Alright then, let's begin. What exactly is infinite banking? An individual can become his or her own banker through a process known as infinite banking. Nash was the one who first conceived of the idea of limitless banking. In his book titled Becoming Your Own Banker, Nash discusses the use of whole life insurance policies that distribute dividends. He explains how ownership of such policies enables individuals to have more control over the flow of cash in their lives by allowing them to borrow against or from themselves rather than having to rely on financial institutions like banks or lenders for loans. The infinite banking mechanism. What's the deal? The infinite banking concept is based on a full life insurance policy as its primary vehicle. Permanent life insurance coverage is known as whole life insurance as opposed to the more conventional term life insurance. This indicates that the coverage is guaranteed for the whole of the insured person's life as long as the payments are paid in a timely manner. A term life insurance policy, on the other hand, only remains in effect for a certain amount of time, such as 20 years or until the policyholder reaches a predetermined age, such as 65. When compared to premiums for term life insurance, those for whole life insurance are much more expensive. The following are the three areas that are covered by the monthly premium payments you make. Cost of doing business, including fees, that part of the payment that goes toward the death benefit, the part of an investment's value which is kept in some kind of savings account. A percentage of each premium payment goes toward funding the cash value savings component of the policy. The ability to take out loans against the cash value portion of your whole life insurance policy while it continues to grow tax deferred is a feature that is exclusive to this type of coverage and can be used to finance significant life expenses such as the purchase of a home or the payment of college tuition. If you follow the steps outlined in the principles of infinite banking, you will be able to become your own banker thanks to the cash value that is included in your life insurance policy. An investigation into the concept of an infinite bank account. The cash surrender value or values of whole life insurance plans function as collateral for loans under Nash's infinite banking concept, IBC. Simply calling up the insurance company and requesting a loan against their coverage is all that is required of the individual. Not only is it intended to help the person's family and friends in the event that the individual passes away, but a whole life insurance policy is meant to cover the whole of an individual's life. Because of this, the insurance is eligible to make dividend payments, which means that it generates a stream of income that adds to the overall value of the policy throughout the course of its duration. As shortly as the policy is activated, it begins to hold value and can be borrowed against. This allows the individual to take out money of the policy as a loan, using the policy itself as collateral, which can then be used to pay for unforeseen or significant costs that come up through a person's experience. The benefits of using infinite banking. The simple increase in liquidity or cash flow is the aspect of the endless banking concept, or process that stands out as being the most obviously beneficial. Because the loan can indeed be begun taking out more rapidly, and also the person can secure cash in hand quicker and typically at lower interest rates than those that are available from traditional lenders, the value of a whole insurance policy acting as collateral is significantly more liquid than, say for example, equity and property investment. By paying your own future debts, not only are you generating a source of financing for yourself, but you are also accumulating an inheritance for your heirs in the form of a policy death benefit. The rise in a person's cash flow may be significant, especially in times of financial trouble or unforeseen demands such as the need to acquire a new vehicle or the need to pay medical expenditures. Examples of these kinds of needs include if a person is unable to work for an extended period of time, whether for reasons related to their own health or those of a family member, or simply because they have been laid off from their job. An insurance policy loan might be of assistance to them. Whole life insurance policies are non-correlated assets, which means they are not tied to the ebbs and flows of the stock market. As a result, the value of these policies is guaranteed to remain stable throughout time. Limitations of infinite banking. The use of infinite banking does, however, come with a few limitations. To be eligible for a whole life insurance coverage, a person must meet certain requirements. And even if the person is eligible for the program, the financial burden that often comes with the need to pay for the coverage may be substantial. At least 10% of an individual's consistent income should be contributed to their whole life insurance on a consistent basis. This is a standard and recommended practice. There are those households who just cannot afford to make such a significant hard times and is forced to take out a loan against their policy. They face the danger of being unable to make appropriate payments on it in the future if they have taken out a loan against it in the past. In the end, people who lack financial confidence, the capacity to think clearly, and the ability to see the process though into the future should not attempt to implement the idea of endless banking or engage in its implementation. For the idea to work, you need a person who is in good financial standing, as well as someone who is ready, willing, and able to engage in a long-term financial play. Before starting your own banking business, you need to give careful consideration to everything that has been discussed thus far. How to establish an infinite banking system? There are several things to take into consideration before getting started if the idea of supporting oneself is something that interests you. The following steps need to be taken in order to establish an endless banking system using a full life policy. 1. Get an early start while monthly payments are lower. When you're younger, you'll pay less for your life insurance rates, and that holds true across the board, because your premium is fixed for the duration of the whole life insurance. The sooner in the policy's term that you purchase it, the better off you will be. 2. Opt for an insurer with a solid reputation. Because infinite banking is a process that takes a person's whole life, it is important to choose trustworthy life insurance firms that you are certain will be in business for the foreseeable future. 3. Decide for a policy that does not involve direct recognition. You may get dividends on your investment if you have a whole life insurance policy. However, if you take out a loan against their worth, the insurance company may only pay dividends on the amount that is currently in the account. Even if you have taken out a loan against the policy, you may still get dividends on the entire cash value if you have a non-direct recognition policy. 4. Pick an insurance plan that includes a cash value rider and provides benefits to your loved ones. Your beneficiary will get the death benefit from the policy, and the cash value will be absorbed by the life insurance company when you pass away, according to the terms of most plans. Put a rider on your insurance policy that offers the beneficiary both the cash value and the face value so that you don't have to worry about losing the cash value when you've built up over the course of your life. 5. Add a paid-up addition rider. If you just pay your monthly premiums, it can take you a decade or more to build up a sizable cash value that you can use as collateral for a loan. If you add the paid-up addition, also known as PUA, insurance rider to your policy, you will have the ability to deposit more money into your cash value, which will allow it to increase more quickly. 6. Don't be afraid to take out a loan. When the time comes for you to take out a loan, the funds for the loan will come from the cash value of your policy, which serves as the collateral for the loan. Simply give your insurance a call and make a request for money. There is no need that you provide an explanation as to why you want the money, and the loan will not have any impact on your credit score. Because the IRS does not consider the loan to be income, the repayment of the loan is not subject to taxation. Number 7. Make restitution to yourself. You will be required to pay interest, but it is likely to be far less than the interest you would pay on a bank loan. You are expected to return the loan even if there are no monthly installments that are needed to be made. You are free to take as much time as you need to repay it. However, you should be aware that doing so will result in a reduction in the death benefit until the loan is paid out in full. Options besides the infinite banking system? There are other ways to borrow money at more favorable rates while still tracking the growth of your savings over time, but not everyone can make this strategy work for them. The consistent application of financial discipline is the key. Here are some alternatives. Number 1. Traditional banks. The majority of commercial banks provide their clients with a selection of savings and loan options that are tailored to meet their specific requirements. 2. The credit union system. Credit unions are organizations that operate on a not-for-profit basis and reinvest all of their profits back into their services. They provide reasonable interest rates on loans and savings accounts, which are often better than those offered by conventional banks. 3. Accounts of savings with a high rate of return. There are a number of online banks that provide high-yield savings accounts, which may provide you with a better interest return on your funds than a savings account via a conventional bank. Learn how to take advantage of the advantages of high-yield accounts by reading up on the topic. A concise explanation of the concept of infinite banking. IBC might be a great personal finance instrument for people with a higher net worth who could benefit from tax savings and desire the ability to borrow money more rapidly. Individuals with a higher net worth could profit from IBC. A person is able to take out a loan against their entire life insurance policy without having to undergo a credit check or a time-consuming underwriting procedure. Covering huge debts like these involves a significant upfront investment into the cash value of the insured policy, despite the fact that it is an excellent method for financing significant costs like a college education or a home purchase. In order for infinite banking to be successful, one must have both a high-quality permanent life insurance coverage and a long-term financial strategy. Get a head start. Even if you don't believe you'll want a loan until many years down the road, buying whole life insurance while you're younger will get you a better rate. When you get insurance at a younger age, you allow yourself more time to accumulate cash before reaching significant life milestones like purchasing a home or funding the school of a dependent. That was all for today's video. Hope you now have a better understanding of what infinite banking is. If you did, please consider subscribing to this channel and ringing the bell icon so you never miss a new update. With that said, I'll see you in the next one.